was watching President Argentina, Javier Milei, claim that the $40 billion they received from the United States was just a currency exchange. Financially, that could not be further from the truth. Let's break down exactly what happened and why it matters to Main Street America. Check it out. The first $20 billion came through a Treasury swap line. That's when the U.S. let Argentina borrow dollars in exchange for its falling pesos. The second $20 billion was structured as a credit facility through private banks and sovereign funds, backed by the same U.S. guarantees. So combined, that's $40 billion in American money being used to stabilize a foreign economy that's defaulted 9 times before. Let's put this in plain terms. If someone's broke and asks you to borrow $20 and you lend it to them so they can keep the lights on, that's not an exchange. That's a loan. And if they can't pay you back, you take the loss. Today, $1 US equals around 1,500 Argentine pesos. That tells you everything about how weak their currency has become. Meanwhile, the US dollar has grown so strong that countries like Argentina can't import without borrowing our money. So when Argentina calls this a currency exchange, they ignore the fact that their entire economy is propped up with U.S. debt. This wasn't even a swap. It was a financial lifeline. And here's where the story gets interesting. Instead of using the money to rebuild reserves or invest in infrastructure, Argentina used that liquidity to lower export taxes on soybeans. Guess what happened next? China stopped buying soybeans from the U.S. for the first time in 7 years and shifted those orders to Argentina. They essentially used U.S. funding to make their soybeans cheaper and take market share away from our own farmers and cause bankruptcy to U.S. farmers in record numbers. So family, when you hear someone say this was just a currency exchange, remember that's spin, it's not finance. The United States didn't exchange currencies. We extended credit and assumed the risk. We took on billions in liabilities to back up a currency that the world has stopped trusting. This isn't a neutral move. This is geopolitical leverage disguised as financial stabilization. And every dollar we commit abroad is a dollar we can't be used to build Main Street, especially to those bankrupt farmers that are going in record numbers across the country.